What if you could hit the $3,000 milestone each month without working a second job or spending extra hours hustling? Well, it's possible, and you don't need hundreds of thousands to invest. In this video, I'll show you the top 5 monthly dividend stocks that can pay you $3,000 in rent money with just a weekly $90 investment. And in the end, I'll show you and Josh a monthly dividend stock that can help you reach this goal in as little as 14 years. Why monthly dividend stocks are a game changer. But first, why are monthly dividend stocks such a big deal? Most stocks make you wait 3 months for dividends, but with monthly payouts, you get a steady cash flow that's perfect for tackling rent or bills. Even better, reinvesting those earnings turbocharges your growth. Think of it like a snowball rolling downhill. And let's be honest, there's something deeply satisfying about seeing that money hit your account every month. It's proof that you're in control, building financial security one step at a time. Coming up, I'll share the top 5 monthly dividend stocks ranked by how quickly they can help you and Josh reach $3,000 per month in passive income to cover your rent. At number 5, I have Sabine Royalty Trust with ticker symbol SBR. It stands out as a unique dividend-paying stock, offering steady income directly tied to royalties from oil and gas production. This makes it an attractive option for investors looking to diversify into the energy sector while enjoying the benefits of a high-yield dividend payer. The benefit of SBR lies in its business model. Unlike companies that drill or manage operations, SBR simply owns royalty interests in oil and gas properties. Every time oil or natural gas is extracted and sold from these properties, SBR earns a portion of the revenue, which it then distributes to shareholders. With a 6.03% dividend yield, a 4.16% growth rate, and an annual share price appreciation of 4.5%, it's an income-generating machine for patient investors. Let's look at the numbers. Starting with a weekly contribution of $90 and reinvesting dividends, the compounding growth begins to take effect. After the first year, the portfolio stands at $4,320. By year 10, the investment grows to $70,200, generating an annual dividend income of $3,400. By year 20, the portfolio value rises to $255,650, providing $13,000 annually, roughly $1,000 monthly in dividends. By year 30, the investment reaches $734,850, with dividends climbing to $36,300 annually, or $3,000 per month. A key milestone is achieved in year 30 when monthly dividends cross the $3,000 threshold. Next, at number 4, I have Main Street Capital Corp., or MAIN for short, which is a high-yield star in the world of dividend investing, offering both substantial income and long-term growth. As a business development company, or BDC, Main plays a unique role by lending to and investing in small to mid-sized businesses, the type of companies that fuel economic growth. Its focus on smaller businesses means it's more exposed to economic fluctuations than companies with more established client bases. A recession or credit crunch could impact its portfolio and, consequently, its dividends. However, Main has a proven track record of maintaining steady payouts, even during challenging times, thanks to its strong management and diversified portfolio. Main offers an attractive 7.64% dividend yield, making it a top choice for those seeking high-income investments. But it doesn't stop there. With an annual growth rate of 3.85% and annual share price appreciation of 5%, Main provides a dual benefit: regular reliable income and portfolio growth over time. Now let's look into the numbers. Starting with a weekly contribution of $90 and reinvesting dividends, the compounding magic takes hold. By year 10, your investment grows to $76,300, providing an annual dividend income of $4,500. By year 20, the portfolio reaches $299,200, and the annual dividend income climbs to $16,250, enough to provide $1,350 per month. Finally, by year 28, the portfolio value hits an impressive $731,500, and the dividend income soars to $36,000 annually, hitting the $3,000 monthly dividend target. Third on my list is Wisdom Tree US High Dividend Fund with the ticker symbol DHS, which is a well-rounded option for investors who prioritize diversification and consistent income growth. As an exchange-traded fund, or ETF, DHS offers exposure to a broad range of high dividend-paying U.S. companies, reducing the risk associated with investing in individual stocks. Its combination of stability, diversification, and compounding potential makes it a strong candidate for anyone seeking financial independence through dividend investing. DHS focuses on companies with robust dividend histories and sustainable payout strategies, ensuring a reliable and growing income stream for investors. With a 3.79% dividend yield, an impressive 7.06 annual dividend growth rate, and an annual share price appreciation of 3.2%, this ETF balances current income with long-term compounding. As for the projections, starting with a weekly contribution of $90 and a reinvestment of dividends, the compounding effect is evident from the start. After the first year, the portfolio value is $4,320. By year 10, the investment grows to $62,500, generating $2,860 annually in dividend income. At year 20, the portfolio reaches $229,000, producing $15,700 annually in dividends. By year 25, the portfolio value rises to an impressive $429,800, with annual dividends reaching $35,500, or roughly $3,000 per month. Sounds good, but there are even better options. In the end, I'll show you and Josh a monthly dividend stock that can help you reach this goal in as little as 14 years. Next, number 2 on my list is Realty Income Corp., famously known as the Monthly Dividend Company, stands as one of the most stable and reliable in dividend investing. With a track record of delivering consistent monthly payouts for decades, it has earned the trust of income-focused investors. Realty Income's business model revolves around its vast portfolio of over 12,000 properties, leased to dependable tenants like Walgreens and Dollar General. While Realty Income is tied to the real estate market and can be impacted by economic downturns or rising interest rates, its focus on long-term leases with financially stable tenants helps mitigate these risks. This makes it a resilient option for investors who value consistent, growing income. Offering a 6% dividend yield, a 3.95% annual dividend growth rate, and an annual share price appreciation of 0.89%. Realty Income combines immediate income with powerful compounding potential. For a weekly investment of $90 and reinvestment of dividends, the power of compounding builds wealth steadily. After just 1 year, the portfolio value stands at $4,320, laying a solid foundation for future growth. By year 10, the portfolio grows to $63,000, generating an annual dividend income of $4,200. By year 20, the portfolio reaches $237,500, providing $22,250 annually. The target of $3,000 in monthly dividends is achieved by year 23, and at that time, the valuation stands at $350,000. And now, finally, taking the top spot on my list is the First Trust Buy Right Income ETF, or FTHI, which is a unique powerhouse in the dividend investing world. It combines a portfolio of dividend-paying stocks with a covered call strategy, generating a high-yield income stream for investors. It holds stocks, the covered part, and sells call options, giving others the chance to buy those stocks at a set price. In return, the ETF earns a fee, the premium. If the stock doesn't exceed the set price, the ETF keeps both the stock and the premium. This strategy generates regular income from dividends and premiums, making it ideal for investors focused on steady cash flow rather than big capital gains. However, as with any investment, there are risks. FTHI's reliance on covered call strategies means it sacrifices some capital appreciation for immediate income. Additionally, market volatility can affect the value of its underlying assets. That said, its premium collection strategy offers a buffer, mitigating some downside risks. This strategy boosts income by collecting option premiums, which are distributed to shareholders along with dividends. With a staggering 8.63% dividend yield, a 9.43% dividend growth rate, and an annual share price appreciation of 2.1%, FTHI is designed to maximize cash flow. Let's look at the numbers. Starting with a weekly contribution of $4,320 and reinvesting dividends, the power of compounding delivers extraordinary results. After the first year, the portfolio value is $4,320. By year 10, the investment grows to $90,000, generating an annual dividend income of $11,750. In just 4 more years, by year 14, It reaches a valuation of $220,500 while paying an annual dividend of almost $38,000, which equates to a monthly dividend income of roughly $3,150. Now, let's combine all these stocks on a horizontal timeline. Combination of all stocks. The horizontal timeline provides a clear visualization of the milestone years for each stock achieving its target dividend income, starting from the longest to the shortest. SBR takes the longest, reaching its milestone in year 30. Main follows, achieving its target in year 28. DHS reaches the milestone in year 25, driven by a diversified portfolio of high dividend-paying stocks. Realty Income Corp., known as the Monthly Dividend Company, achieves its target in year 23. Finally, FTHI reached its goal fastest in year 14, leveraging its high-yield covered call strategy. For more simple breakdowns on finance and how it works, click the video on screen.